Hello and welcome to the 2025 TMT M&A and Investment Outlook. My name is Sean Murphy. I'm a corporate partner in our London office and I lead our technology practice in EMEA. In the previous episode, we discussed trends in technology, media and telecoms M&A and investment in Europe and North America. In this episode, we're going to turn to China. We'll discuss what the TMT, M&A and investment trends in China have been so far this year and what we expect to see in the rest of this year and beyond. I'm going to turn first to Shibin Zhao. Shibin is a senior associate in our Shanghai office. Shibin, could you start by giving us an overview of the TMT, M&A and investment trends in China for the first half of this year, please?
Yeah, sure. Thank you, Sean. In the first half of 2025, China's M&A activity, including the tech sector, experienced a steady increase in both deal value and volume compared to the same period in 2024. This growth has been primarily driven by domestic strategic acquisitions, particularly in high-tech sectors such as semiconductors. These transactions in tech sector accounted for a significant share of mega deals, reflecting China's strategic priorities and continued policy support for technical advancement. Notably, the rise of AI and robotics business in China, which gained public attention in early 2025, has injected fresh momentum into the high-tech sector and contributed to a more optimistic economic outlook. In terms of market participants, domestic strategic buyers, including A-share-listed companies, state-owned enterprises, and China's tech giants, have been actively pursuing domestic transactions. Meanwhile, inbound investment from foreign investors remains subdued due to ongoing economic and geopolitical uncertainties. Outbound M&A and investments by Chinese tech companies have also been relatively weak, though signs of recovery emerged with several major deals in Europe during H1 2025. In the primary market, fundraising remains challenging, but private equity deal activity has been flat as well. However, venture capital investment in AI and AI-enabled applications have surged since the beginning of this year. Our Shanghai office represented several foreign clients in financial investments, including potential ones into Chinese AI startups, signaling renewed foreign interest in China's cutting-edge technologies. M&A has become the primary exit route for PE funds in H1 2025, with deal makers actively seeking opportunities in the market. It's also worth highlighting the strong rebound in Hong Kong's IPO market, which is on track for its best performance in a decade. This resurgence has been driven by listings of high-profile mainland Chinese tech companies, streamlined listing procedures, and improved valuations. These are the factors that have also positively impacted M&A activity in China.
Thanks, Shibin, for the overview. Could you talk a little bit about what the key drivers for TMT, M&A investment in China in the first half of this year were?
Yeah, I think four key themes have defined China's tech M&A and investment activity in the first half of 2025. First, robust domestic markets. China's national priorities promoting meaningful industrial consolidation and technical innovation have encouraged domestic tech companies to pursue strategic transactions. Second, sectoral focus. Advanced manufacturing, semiconductors, and AI are among the top groups dominating deal flow and investment activity. Third, regulatory support and predictability. The government has introduced and implemented several supportive policies, including amendments to CSRC rules on material asset restructuring of listed companies and legislation promoting private sector growth. And the last one, further opening to foreign investment. While foreign inbound and cross-border M&A remains limited in China, Chinese government has continued to roll out measures to attract foreign capital, such as liberalizing foreign exchange regulations and launching the 2025 Action Plan to stabilize foreign investment.
Okay, so that's what's been happening so far this year. Let's turn to the future. I'm going to ask you to make a prediction, Shabin. What's the outlook for the rest of 2025 and then into next year?
Looking ahead, global trade and geopolitical uncertainties will remain key challenges. However, renewed confidence in China's tech sector, particularly in AI and robotics, is driving signs of recovery in the M&A market, which we expect to continue through the rest of the year and beyond. The strong performance of Hong Kong's capital markets and rising valuations are likely to create more exit and deal opportunities for tech companies as AI and high-end technologies continue to evolve. And with further policy support, China remains a compelling long-term destination for both strategic and financial foreign investment. That said, we still maintain a cautiously optimistic outlook for the recovery of tech M&A and investment activity in China. While rapid growth is unlikely, the current momentum presents meaningful opportunities to reshape the landscape of China's tech sector in the near future.
Thank you, Shabin. I'm now joined by Johnny Liu. Johnny is a senior associate at Shanghai Pacific. He's going to discuss the impact of regulation on M&A and investment in China. Johnny, could we start by asking you how recent regulatory developments in China are shaping M&A and investment?
Thank you, Sean. So, since the beginning of 2025, we've seen a wave of legislative developments in China that signal a shift towards stricter governance and deeper compliance requirements. Firstly, the network data security management measures, which came into force on January 1st this year, serve as a key implementation rule for China's three foundational laws in the data protection and cybersecurity space, i.e., the cybersecurity law, the data security law, and the personal information protection law. And this regulation provides clearer compliance expectations for companies handling data, including those involved in M&A, where data transfer arrangements are often an integral part of the transaction. And secondly, the cybersecurity law is undergoing a major revision. The draft amendment, circulated in March this year, introduces stricter penalties, more detailed enforcement standards, and stronger protection for critical information infrastructure, or CII. And this is particularly relevant for deals involving cloud or telecom services or heavy digital assets. And thirdly, in the area of personal information protection, the Personal Information Protection Compliance Audit measures, which took effect in May this year, requires companies to conduct deep, multidimensional audits of their data practices. And this goes beyond privacy policies and demands a full review of how personal data is collected, stored, and used. And for M&A, this means buyer must assess not just legal risks, but also operational readiness.
Thanks, Johnny. Let's turn to merger control and national security. These are topics that are playing an important role in shaping M&A and investment in other regions. What role are they playing in China?
So, in recent years, China has significantly tightened its merger control and national security review frameworks, particularly impacting M&A in the technology sector. The amended anti-monopoly law and updated notification thresholds, which became effective in January 2024, raised the threshold for mandatory filings, which reduces the number of transactions subject to review. However, the regulator, SAMR, retains broad calling powers to scrutinize below-threshold deals, especially in sensitive industries like semiconductors and medicals. And the newly issued horizontal merger review guidelines provide detailed criteria for assessing market concentration and anti-competitive risks. And on the national security front, foreign investments in strategic sectors remain subject to pre-closing reviews, with authorities empowered to block or set conditions for deals that may affect China's public interest or national security. And these developments reflect a dual focus, safeguarding competition and protecting strategic assets, and which makes early regulatory engagement quite critical for deal success.
Another area I think we should talk about is data protection. How are the recent changes to China's cross-border data transfer regime impacting M&A and investment?
So cross-border data transfer is another area undergoing transformation. The draft measures on certification for the protection of personal information exports, circulated in January this year, aim to detail a certification-based mechanism to facilitate personal data exports, especially for intra-group data transfers conducted by multinational companies. And also, pilot free trade zones across China have been issuing negative lists for data export activities within those zones. And according to such negative lists, exporting specific categories and amount of data require prior regulatory procedures, namely security assessments, standard contract filings, or certification before data being transferred across borders. Data not included in the list can be exported without these formalities, and this enables enterprises to meet their cross-border data flow needs more efficiently within designated sectors like automotive, pharmaceuticals, retail, civil aviation, and AI. And in addition, local governments like Guangzhou are also exploring innovative approaches, such as establishing data protection officer associations, and there are more flexible data transfer regimes within the Greater Bay Area as compared with other parts of China. And these initiatives could create regional opportunities for deal structuring and compliance optimization.
So sticking with data for a moment, how are personal information enforcement trends affecting M&A and investment activity in China?
So on the enforcement side, we are seeing a clear shift toward more frequent, coordinated, and transparent actions. In March, 4 key ministries in China jointly launched a new round of personal information protection campaigns targeting smart endpoints, facial recognition in public spaces, and offline collection concerning consumers. Enforcement is now routine and increasingly granular. Regulators are using a mix of tools ranging from fines and app takedowns to criminal liabilities. And this raises the stakes for buyers who must factor enforcement risk into due diligence and deal structuring. And importantly, the Supreme People's Court recently released 6 guiding cases on data rights and platform governance. And these cases provide legal clarity on issues like data ownership and user accounts on online platforms. And these are typically key concerns in post-deal integration.
Okay, so let's talk about opportunities. What market opportunities do you think are emerging from the recent regulatory changes that you've discussed?
So these regulatory shifts are not just constraints. They are also shaping new market opportunities. For example, AI safety is emerging as a hot area. And with the rise of large language models, companies are investing in privacy-preserving technologies and AI governance frameworks. And these capabilities may now be seen as strategic assets in M&A. And we are also seeing the rise of zero-trust architecture and cloud-native security, especially in sectors like finance, energy, and manufacturing. And targets with mature security frameworks are expecting premium valuations. And finally, the data security market itself is expanding rapidly. And new services like data security insurance, privacy computing, and data asset valuation are gaining traction. And this definitely opens up new deal themes and investment angles.
Thank you very much, Johnny. We hope this has been a useful update on TMT, M&A and investment trends in China. We'll check back in the similar time next year to see whether Shabin and Johnny's predictions were correct. In the meantime, thank you very much for joining us.